Okay, the next one we're going to talk about is leases, Statement 87. What I want to focus on first, couple of practical things based on what we've heard. Don't forget about debt limits and bond covenants, right? Think about these sooner rather than later. All leases that are lasting more than a year are going to be reported by lessees as long-term liabilities. So what that means is you need to review your state, your local laws and agreements to determine how and whether that could impact your compliance with these debt limitations and bond covenants. Policies and procedures. Listen, before I arrived at Gatsby's door 13 years ago, for a little over 20 years, I was an auditor of governments or a preparer for a couple of governments. Never once did I have a client or work for a government that had a central repository for lease agreements. It was always very decentralized, right? So you can betcha now, if I was still in practice, I'd be putting into place some new policies and procedures, because once you go through that grueling exercise of inventorying what you got, you certainly don't want to be doing that every year. And it would be a lot better if you could be updating that throughout the year as new agreements are put into place. The other thing I wanted to highlight, transition provisions. Remember, we talked about this up front with Statement 87, with Statement 95, is remember that 87 requires that leases be recognized and measured using the facts and circumstances as of the beginning of your period of implementation. So you can't wait until the very end, because you need that information as of the beginning of your period. So be mindful of that as you continue thinking about your implementation of Statement 87.